Hey guys, and welcome to MPS Tips video. In today's video I will give you some tips of how you can pinpoint your pattern entries and pattern targets. Okay, the idea that I want to express today is based on pattern structure, and before I go deep into details, we should first refresh our knowledge about the pattern structure. So this is very important if you have never heard about pattern structure. If you only heard about some Fibonacci ratios and some other blah blah stuff, then you must listen to what I say right now. Okay, so what is a pattern structure? Let's go and start from the very beginning. Of course, to understand a pattern structure, you should first understand what is a trend. I will show a downtrend example, but you should keep in mind that the uptrend is inverse. So a downtrend is a series of lower lows followed by lower highs. So this is very simple. It would be okay if it were so simple, and the problem is inside this stuff, inside this pullback. In many cases it is not straight. Actually, only 1/3 of all pullbacks are straight. Other 2/3 are complex pullbacks. So what are complex pullbacks? There are two types of complex pullbacks. One of them is a pullback that actually exceeds its initial movement. So I call it a zigzag pullback, and then a trend resumes. And another pullback is a triangular pullback. So it looks this way. It does not exceed the initial move, and then the trend resumes. So these two are complex pullbacks, this one and this one. It is very hard to predict when this pullback will terminate. And that's why it is very hard to enter into pattern completion. It is also very hard to predict when this pullback will terminate, and that's why it is very hard to enter this as a trend continuation. Okay, you see, so with this two we have some problems, but this one is the simplest stuff. So let me clean the chart, and let me show you this structure. So we have a trend and we have a complex pullback. So what we expect somewhere here a trend should resume, and this way we actually have a pattern. If the completion of this pattern is below the X point, I personally call it a Gartley pattern, unified Gartley pattern, yes. And if the completion of this pattern is above the X point, for example here, I personally call it a butterfly pattern. So I don't believe in those pattern variations such like bat patterns, Leonardo patterns, crab patterns, alternative bats and other stuff. For me it's complete crap. It doesn't make any sense. Because the idea of all these pattern variations is based on pattern ratios, and very little attention is paid to pattern structure. Okay, now let's go back. This was a deviation of on pattern types. Let's go back to our pattern structure. So suppose we have a pattern, yes, like this, and we have that kind of complex pullback, and we expect it to reverse somewhere here. So how do we predict that it should reverse? Some guys are say the following: simply need to measure your Fibonacci tool, yes, and if it is 618, 786, 886, 0.5 or whatever, if this pullback terminates at those levels like this 618 or whatever, then this is a magical level, and you should trade it from that level. Well, this is nonsense. This is not the true. Actually, Fibonacci don't work in the market. and the second thing is that it is not ratios, it is the pattern structure. Okay, well, some other guys say that you simply need to measure your first leg like this if it is 10 pips, then your second leg should also be 10 pips, so you always place your 10 pips, 10 pips, 10 pips, not 10 pips, but I'm just saying that it should equal to your previous leg movement, so you always place your entry here, 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 and nowhere else. But based on my market research, this is only part of the truth. This is not the whole truth. So there are pullbacks that looks this way, like this. You see this movement before a trend resumes. Yes, you see, this movement is shorter than the previous movement, and there are pullbacks that go here, and if you might have noticed, this pullback is greater than this initial move. So I have calculated a proportion of how often we have this kind pullbacks, this kind pullbacks, and this kind pullbacks, and I was amazed to know that this one-to-one pullback only happens 1/3 of the time. And well, I did other calculations. I found that this pullbacks that are less than 1-to-1, they take another 1/3 of the time. So I mean that the reversal happens after that. So here, from here, reversal happens, and I also calculated how often reversal happens from these levels, and it is also 1/3 of the time. So if you only are concentrated on this one-to-one measured move, you will miss the reversals. 2/3 of the reversals will be missed. Here you will simply miss the trade, and here you will have a very bad entry. So you could enter, you could have a better entry. Okay, so it is a bit silly to always have one entry. So they say the Gartley should always be 786 entry, a BAT should be 886 entry, something else should be 0.5 entry, Pesavento pattern should be 618 entry, and so on and so forth. This is not okay. So your entry should be based on pattern structure. And how do you know your pattern structure? How do you know if it will be short? How do you know if it will be equal or greater than your initial leg? How do you know this? And the answer is very, very simple. I will give you some time to guess. Probably some of you already understood how you measure this. Okay, if you want extra time, you just pause this video and think it yourself, and then type down your result and come back to watch this video. Okay guys, I will reveal you the secret. This secret is, I don't know, as simple as everything in trading, and it is as old as trading itself. So we all know that prices like to move in channels. Majority of time prices move in channels. So if you want to predict your reversal, you simply need to apply a parallel channel to it. So how you apply a parallel channel? You simply take a parallel channel and you connect your A and C points, and then you place your top stuff to your B point, and now you can see if the movement is steep, then its completion will be earlier. You see, if the movement slope equals to this initial slope, then this entry will be as a one-to-one harmonic movement, yes. And if the slope is not steep, then you will probably have the further completion. So as you might have guessed, this kind of looks a bit strange. They always say if it is the movement is steep, then the completion should go further because the market is gaining momentum and blah 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 stuff. guys, this is not based on a market research. At best, these words are based on something that was read in the book, written by the guys who never made their own research but have read something in a book written by the guys who never made the market research but read something in the book written by some other guys. So this is a copy-paste thing. One guys are copying other guys and copying some other guys, and none of them ever did research. So when you read all these books, read all these training courses and articles in the internet, you just do your own market research and simply calculate how often price does this and how often price does something else. In today's video we will do a market research, so you will witness it with your own eyes, how it works. Okay, now you understand that it doesn't matter what is your Fibonacci ratio. Yes, so price right now reversed at where? 0.5, and next it reversed at 786, next it reversed at 0.9 and whatever. So it doesn't actually matter what is your Fibonacci. Well, as you understand the completion, so what about targets? The best target placement is the opposite channel, opposite border of the channel. So after touching the border of the channel, just aim at this second. You first go with the trend, and I remind you that the trend is here, and the probability for this to happen is extremely high. After this happens, you can close part of your position and aim at a continuation. And because we know that prices tend to move in equal ranges, just imagine this range and project it here. So you can aim to this level. Yes, you can aim to this point. This will be equal to your XA leg, and the initial one will be equal to your BTC leg. So if you will measure the range of your BC leg like this, yes, and you will project it here, this first movement will be equal to your BC movement. Okay, so I added these things, I added these types of targets into MPS. So you simply type XA or BC instead of a target, and this feature is available since the version 5.547. So if you have a lower version, you are welcome to run your MPS update center. It will automatically download and install the most up-to-date files. Okay, now it's time to open our MPS and to enable some patterns. So I am enabling a unified Gartley. As you guys can see, a unified Gartley is not a Gartley that is based on some ratios, not is based on some Fibonacci magic, voodoo magic stuff. It is simply a pattern that is based on structure. That's why its B point may be different from standard, its C point may be different from standard, and its completion may be different from standard completion as well. So if you will see my, let's say, 1 hour time frame, yes, so I have these number of variations, and you will see that every variation depending on the B point and the C point has the completion, its own completion, its own stop loss, and its own target. So if I switch to this variation, you see different B point, different C point, and different trading stuff based on their ratios. This is because of my backtesting. I backtested and optimized them the way to better fit price action. Okay, and today I want to show you how to how to have these patterns fit in price action the best way, but you don't need to do any optimization. You don't need to walk that difficult way of testing millions of patterns, pattern variations I mean, because if you will multiply all possible B point ratios by all possible C point ratios and all possible entry ratios, all possible stop loss ratios and all possible target ratios, you will have millions of variations total. So what I'm suggesting right now is not using that difficult way of checking every possible variation, not testing those millions of variations, but simply use structure, simply use something that is known to everybody, something that is as old as trading itself. Okay, so let me enable a pattern and let's have a look at its parameters. So I typed the B point as 1/3 to 0.7. Actually, I initially wanted 2/3, 1/3 to 2/3, but then I thought that 2/3 is almost the same as 0.7. Then the C point is 1/3 to whole. Then the B point, the D point is the completion. This D point, it doesn't matter at all. Doesn't matter. So let's type it 0.2/3. So and let me type this as 2/3. Okay, so let me this is 2/3. This is 2/3. The stop loss, I place the stop loss as 1 Fibonacci extension. This means that it coincides with X point absolutely. And I disable targets. So if I enable something here, for example, I wish my target be twice greater than my risk distance, then you will see that I have it twice greater. I have 3 slots here, so I simply change zeros to my values. For example, second target will be 1.618 greater or whatever. The order doesn't matter. So I can type greater numbers here and less numbers here. And here's the idea that I was explaining to you today. I told you that you now can use BC targets. So this is the target. So let me zoom it in. This is the target based on your B to C leg. So if you measure your BC range, yes, and then you simply paste it here. Suppose your pattern completed here, and this BC completion would be very nice for your first target. And I also added the possibility of XA targets. So if you will measure your XA leg, yes, and you project it from your entry, you will see that this is your XA leg. So I'm talking about this bear pattern. So let me disable the bull one. Well, so we have it this way. Unfortunately, the pattern didn't complete. I'm simply using it as a demonstration. Now, let's do a kind of backtest. I promised to you to do a backtest, and I will disable targets because final targets will be based on the channel, entries will be based on the channel, and nothing else is needed. Okay. So let's examine this pattern that is likely to complete, but I'm not recommending you to enter this pattern. And there are reasons for that. If you will draw your channel and project it here. So we had some rejection, rejection and consolidation. So you see these wicks to the upside. Some guys tried to push it higher, yes, but then it broke to the downside. So the channel was broken to the downside and the structure is no longer valid, so you don't trade it. Okay, so this is the pattern number 1. This never did a completion, never went to complete a pattern. And now let me find some more examples. Okay, let's examine this example. So we draw the channel we place it here, and look at this situation. Price was consolidating slightly at this lower border, and then it finally hit the completion. So how we can deal with this situation? We here had a rejection, and then we had a violation. It's not a breakout according to my rules, because the breakout should be a violation followed by a so-called follow-through. So we should have this kind of candle. This is a violation, and this is a kind of candle that follows through. But here we didn't have that follow through. We had that bullish reversal candle. Let's say our bullish candle is our entry trigger, so we could enter here like this. Yes, those of you who dislike this entry, those of you who say, well, you know what, I dislike this, what is this pattern, a piercing pattern or whatever, yes, when the body is traded back almost to the beginning of the previous body, yes, maybe a piercing pattern. So those of you who dislike that, you could wait for a spinning top and enter here, or maybe a hammer, yes, and enter here. So it doesn't matter where you enter. Okay, come on. It's not working. Let me do it this way. It doesn't matter where you enter. The thing is that price didn't hit the stop loss. It first went to hit the target. And in this particular situation, let's examine the worst case scenario when you enter the earlier. So you hit 71 pips. And then after that, yes, price did the following. It completed the pattern for the second time. Yes, completed this channel for the second time. And then another reversal happened. So you could enter this for the second time as well. But in this case, this extreme will be lower than the X point, and that's why I would call this pattern a butterfly pattern. A butterfly pattern, a pattern that completes below the X point. You can call it whatever name, but I will call it a butterfly pattern. And again, it is simply based on the same channel. So you hit your winner once, and if you trade those butterflies, you hit your winner twice for the second time. Nice. Now let's examine some more situations. Here it is. Here's the trading opportunity, and let me. Okay, so here's the trading opportunity, and you place it at the B point. You see the pattern didn't complete. It didn't hit the channel. It didn't hit the completion. So it started the movement earlier. Okay, now let's examine some other situations. I will disable bearish pattern for now, and let's examine the bullish pattern. So if you trade this channel, you see that the pattern didn't complete. But if you use this channel, you can see that it rejected, and then you had a reversal, and it hit targets 151 pips. Then let me disable bull, enable bear. For example, this pattern, let me isolate that. You see the C point was slightly exceeded, so let me isolate this. Now the pattern looks this way. And if you draw the channel, you will also see the following stuff. By the way, guys, when you draw a channel, you should use the same rules as with trend lines. If you have a possibility, you try to draw your channels that do not split candle bodies. So you should not split candles. So probably you should draw channels this way, a channel this way. And of course you can adjust that channel to hit as many points, reference points, as possible. So the more points you have, the stronger is your trend line and stronger is your channel. Okay, so in this situation we have price hitting it here, and then we have our bearish close, this one, and it gives us 360 pips each. Okay, now let me use automated recognition back, and let's examine this pattern. Again, you simply project this channel and you place it to your entry. Yes, so you see that the pattern itself didn't complete. Although it is 0.666 pattern, it is not even 0.786, it's not even a 0.75, it is 0.666. Yes, you can see that because of these B and C point placements, you have that completion here. So it just touches that, and then it gives you a black candle, which is our trigger, and we enter to generate 247 pips. So we just had a look at 4 patterns, and they all were winners. Okay, nice start. Okay, now let me examine this one. Here, what we have a pattern. Let's apply a channel. This is a pattern number 5. Okay, and in this situation we have a violation and a follow-through. Okay, this means that you should stay away from this, at least to my rules of violation of lines, of support resistant violation, of trend line violation, channel violation. This is a breakout according to my rules, so simply stay away from this. Of course, we miss this winner. Pattern number 5, missing winner. Pattern number 6, here's a potentially redrawing pattern. Okay, and what happens here if I redraw this pattern? So I use it this way, and I should place this way. We have a break above, and then we have a follow through, then we have a retracement and another. So no wonder it hits stop loss, but it hits stop loss only for those who entered. If you use your channel, you didn't have any rejection, that's why you never traded, and that's why this pattern is not something that you traded. Okay, one more example, this smaller pattern. This is something that we didn't trade at all, because it simply violated the channel. We never had our bull candle to trigger our trade. Very, very simple. Okay, then let's go. This was invalidated. Let us find more examples. So here's the trade, placing at the B point, and you see close above, then follow through, follow through, follow through. So this pattern actually was violated, and you do not enter. No trade, no loss. Okay, one more example. The C point was exceeded, and that's why we should redraw the pattern. Okay, and now let us apply a channel. So when you apply this channel, so what we have here, probably we should unite it from here to here. Doesn't matter how you draw it. Look at this situation. So you first touch your channel. You first touch your channel by this candle, and then you reverse and trigger your trade like this. I remind you that your stop loss goes here, and after that you have your channel violated, but you were already triggered. That's why you generate 361. You never hit your stop loss. As for some trade management, let's create some rules, at least the rules that I use. For example, your trade moved half of your distance. In this case, you should place your stop loss from here to just above your reversal. For example, this was a reversal. and if your trade moved 2/3, yes, then you should place your stop loss from here to your entry. In this case it would become a break-even trade. So this simple trade management rules that help you cut your losses. So if you traveled half of the channel distance, you just move your stop loss above the reversal, and if you travel 2/3 or maybe 3/4, then you break even your trade. Of course you need some rules. This situation was a winner, obvious winner. Let's go next. Here's the triangular. Okay, here's the triangular. Now let us see this situation. Potentially this one is a loss, but who knows. Nope, we had a channel violation, then we had a follow through, and finally those of you who enter at pattern completion only, you would have had a loss. Those of you who were using channels, you would see that the channel was violated, and that's why it makes no sense to enter. Okay, the bull pattern didn't complete. This bear pattern, it looks like a nice example. So guys, do you calculate how many winners we have? We didn't have any stop losses yet. We either avoided stop losses. Yes, we only avoided them. Okay, so this one gaps, and it completes the channel and closes below. So it is a wonderful rejection, and it gives you 294 pips win. A very nice win. Okay, this didn't complete, and this one. So you move it here, and then you probably move it here. Okay, just look at this situation. So you have that completion and then immediate rejection, a textbook situation winner, 399 pips winner. This invalidated. This one, let's examine it. Probably it is the one that should be skipped because of channel violation, and it happens, we just missed a winner. So this is the second winner that we missed. This one, draw the channel. Okay, so the channel completes here at this candle, and then we have this bull candle close, and it is 88 pips winner. Then we go next. Let me disable bull ones. A bearish pattern. Okay, we had a rejection here, and then we moved always to hit target. And as I told you guys, one of my rules is to measure this distance, how far we moved towards our take profit. So if we move half of the channel, yes, then we place our stop loss above this rejection. If we moved 3/4 or we moved 2/3, then we'll place our stop loss back to break even. So actually when this price reversed here, it was a break even trade. So according to my rules, it is not a stop loss, but this trade is something that is actually how can I explain it to you? That is, this trade is something that you should reverse. Because look at that situation, it does not hit your take profit, and that violates your channel with this powerful bull candle, yes, and then it is testing your channel. So you see that? So you simply need to trade it the opposite way. You need to trade that to the upside. Nice idea, and this is a nice picture illustrating when you should not to be stubborn and trade it this way, but be smart and trade it the opposite way. Okay, Now let's go next. So this was a break-even trade, and let us see what else do we have. Okay, this situation, we touched our channel, then we install our trigger candle, yes. We didn't move half, we didn't move 2/3, that's why our stop loss stays intact. We slightly consolidated, and then we finally hit the take profit. So totally it was 140 pips take profit. Don't be in a hurry to move your stop losses. Wait for price to start moving in your direction. Okay, this bull pattern first. Well, it crosses the candle. This should not cross the candle. So you can do it this way. You can draw it this way, the channel, yes, or you can draw it this way. I don't recommend you doing it this way because your C point is very high from the border. So I would like to draw it this way. Anyways, this is a pattern that didn't hit the channel completion. It hit its own completion, the completion of the pattern, but it didn't hit the channel completion. That's why we simply don't have this pattern. Okay, it is a so-called missed winner. We missed this winner. One more pattern here, and with this example we have this large candle that breaks the channel. If we have a look at these spikes, probably we should unite as many as possible. No, guys, no. The A and C point, pretty clear. Okay, so we did the violation of that, and then we never rejected into this channel area, so we had a follow through, and that's why we do not enter this pattern. So we skip this stop loss or whatever. If you don't enter, you don't have a stop loss. Okay, one more situation from here to here. We triggered the trade, and then at this candle we entered, for example, yes. Then we moved deep into the channel, more than half, yes, and this means that we should place the stop loss just above the completion. And we went even deeper. I think this is 2/3 and this is 1/3, and this means that we should place stop loss to break even. Of course, it should be calculated to have precise numbers, but for now it looks like it should be break-even trade. Okay, if you use these rules. If you don't use that rules, then it should be a stop loss trade for you. Okay, this one. I am taking every possible pattern that is drawn. So what we have here, we have a rejection and we have a bull candle, yes, and it was a stop loss. So this is the first stop loss out of all trades that were demonstrated previously. Finally we had a stop loss. Okay, let it be. Another pattern here, and it is a textbook reversal. Slightly exceeded the channel, and then we rejected, closing with this black candle, giving us an entry, 200 pips profit. Then let's go next. First, disable bear and examine all these bull patterns. So this one, It is a textbook reversal. You see that, touching the channel and then reversing back. Okay, second one. A second one is what? Okay, it touches the channel and then it gives us an entry here. If you will have a look at this, yes, then the middle line of the channel somewhere here, and your entry is greater than your middle line. So this means you should enter and place your stop loss immediately before that. It is a bit strange. Well, wait for some other entry, do not enter here. Maybe price will give you another entry. Okay, as for the second touch, we had this, then we had a spinning top, spinning bottom, sorry, and then we had this price, but it didn't enter into the channel area. So this bull close is not inside the channel, that's why we do not enter. And next bull close is again very deep into the channel. It is very deep in the channel, and that's why we don't enter this as well. Of course, you could draw the channel this way, yes, from here to here, and this will be inside that channel entry, and you can see this almost touched your take profit, and that's why it should be a break-even trade. Or maybe you were fast enough to close this take profit here, or maybe your broker provided you a bit different quotes which are 1 pip higher than others, and you hit your take profit. Well, maybe but here you have a butterfly variation as well. So if you will enter here, maybe here, then you have a butterfly winner, the one that exceeds the X point. Okay, break-even trade here, break-even. I would stay away from those entries because these candles are very deep inside into this target zone. That's why it makes no sense for me. As for this trading opportunity, it simply violates that. Then it is not a continuation, so it's more like a spinning top, but the next candle does not close inside the channel area, and the next candle that does close is very deep in the channel area, exceeding the half of that. Probably I would wait for a retracement and enter somewhere closer to this entry and hit this take profit, but technically I should avoid this pattern. Okay, now bear patterns. With bear patterns we have the following picture. One pattern exceeded the C point, and we have the following picture. You see this spike at the A point? We should actually draw it this way. Try to unite as many points as possible. We are not crossing any candles bodies, we are only hitting the wicks. So in this case it should be a winner, sorry, it should be a triggered trade. We should enter here, and because it moved very far into target zone, it finally should turn into a break-even trade. But if we draw it originally as we did previously, yes, the channel was not touched here and it was violated here, and after that we didn't have any rejection, we had a follow through. That's why we avoid this trade. Okay, either a break-even or something that was avoided, depending on how you draw that channel. Okay, the next situation is this one. So we draw this pattern, we draw it here, and guys, again, we should unite few candles to have them here. Okay, if you do unite them, yes, if you will simply ignore that downside spike, then your channel is touched, your pattern is completed, and you have a winner. If you don't ignore them, if you are very strict with your channel rules, using only extremes, then your pattern didn't complete and you missed that winner. Well, it happens sometimes. You shouldn't be worried about this. Patterns appear again and again and again. This is eternal market nature to generate patterns. Okay, so this one is either nothing or a winner. Okay, bull patterns were examined already. Now let us see this one. So what do we have here? Is this situation? Probably it should be this. No, it didn't hit the pattern completion. It didn't go there. Okay, so this was not a trade that should be recorded as a winner. Another situation is here, this one, and we can probably draw it this way. Here we obviously have this is a bearish close, yes, and then we have a bullish close, which is not that very deep. Well, yes, it is less than 50% of a channel. Okay. We didn't move to hit the opposite border of the channel, but we moved far enough to initiate this break-even stop loss management. So we moved our stop loss to entry. That's why the trade finally turned out to be a break-even trade. Next, let's examine this situation. It is nothing here, no trading opportunity. Let's examine the next one. We do not split any candle bodies. Okay, so this is the candle of entry, and this is a obvious winner. Next we have these ones. This is a textbook win. Perfect. This was invalidated. So what happened to this? So it's a B point. $129 to 108. Well, it is less than 50%, and it moves to stop loss. Probably if you enter that deep inside of the channel, then it moves to stop loss. If you would wait for a better entry, then it maybe won't be that. Okay. So let's consider this to be a stop loss. This is our stop loss number 2. And that's it, 1998. We tested 21 years of historical data. Well, guys, hope you now understand the power of this channel thing, and hope you understand how to use pattern structure, not pattern ratios, but pattern structure. With MPS, it is very easy to recognize patterns. It will draw them exactly the way you code in these tables, and it will draw the targets, stop losses, B point, C point ratios according to your numbers. Well, that's it for today. Hope you liked this video. If so, give me a thumbs up, share this video for social media, and until then, good luck and good trading.